If I could, I've just ran a poll and everyone's voted 100% that they like this daily webinars. If you can, do me a big favor, head on to my page here. You can see the link up there. I think one of the guys will put the link in the chat. You can hit there. We are streaming this live on Facebook and YouTube. Do me a huge favor, click share, post it up share it onto your own Facebook, and then we can hopefully get more people onto these calls. So with that said, I hope you do that. We have quite a number of you here, so I'm looking for everyone to share this. With that said, looking at Forex Trading Asia, Scott has gone through this briefly. Why I say that it's going to be an interesting week, because you can see here is that we have a lot of news. We have a lot of news to be released today, this week. But what you'll notice is today we have the UK on holiday. We have some news, but these are not big price mover news that's going to happening today. Following on from that, tomorrow, Tuesday, paying in particular attention to the Aussie and the Kiwi dollar. We have some building consensus number from the New Zealand side, some Aussie and New Zealand numbers, not huge price movers. We have some Euro GDP numbers again, but you anticipate that there's not a big change in terms of Euro CPI and GDP numbers here. Following on from that, we spoke about GDP for the Canadians last week. You'll notice that on Wednesday, we have some Aussie GDP numbers year on year for Australia, expected to go from 1.1 to a 9.2. This seems like a really big number. I'm not too sure whether it's going to hit that number, especially given that quarter on quarter is looking like it's going to go from 1.8 to a 0.5. So it looks like possibly a drop here on GDP, on a non-sustained growth in terms of GDP. So going from a 1.8 to a 0.5. If that does happen, then we could anticipate some weakness for the Aussie dollar to continue, right, at this point. And then we have a lot of other news, some PMI numbers from the Eurozone. I'll tell you more about that tomorrow. Following on from that, US PMI numbers, not a big change here. On Thursday, we have the Swiss franc. We don't do that. I don't touch the Swiss franc too much. I'll tell you more about why I don't do that at another time. But the main focus, the main highlight is on Friday, where we do have PMI numbers throughout the afternoon here. But the main focus is on non-farm payrolls for the US, expected to go from 943K to a 728K. Unemployment rate expected to go from 5.4 to a 5.2, with average hourly earnings on a month-to-month holding at 0.4%. So just to give you a little bit more info about the non-farm payrolls. Non-farm payrolls are usually being released on the first Friday of every month. It is a clear and strong indicator of the overall performance of the US economy, as it gives the market an indication of how many people are being employed, what's the unemployment rate, how many people are looking for work but can't find work, and the average hourly earnings in terms of how much they're being paid. Non-farm payrolls is a bit of a less seasonal employment indicator, as it takes out the farming side of employment. So you get a better indication in a general view. And this is being released once a month, every first Friday of the month. And pretty much everyone in any markets pay attention to the non-farm payroll data. So with that, what we usually anticipate for non-farm payrolls on Friday evenings here in Singapore GMT +8 is that you'll see rather higher volatilities when the non-farm payroll is released. Whether it's going to meet expectations of 728K or whether it's going to exceed probably towards the 900, or if it does drop below, we're going to see a lot of volatility there. But non-farm payrolls has changed a little bit from back when I even started trading. Previously, when I was first trading, all you have to pay attention to was the non-farm payroll numbers. Now what you have to pay attention to is a combination of the non-farm payroll numbers, the unemployment rate, whether it's going to go from a 5.4 to a 5.2, and also the average hourly earnings. We have seen that the US have had very good employment numbers, and the focus has now shifted towards the average hourly earnings, because you don't want to be working, you don't want more people to be working by being paid less. That's the inflationary number in terms of employment and pay. So the focus for this week is the non-farm payrolls on Friday. What we're going to see is markets probably trending a little bit, moving a little bit more conservatively leading up to this news. This is usually the case. We see the week being a little bit quieter as markets prepare or price in towards the non-farm payrolls on Friday. And when it releases, we're likely to see a lot more volatility. But with that volatility, what you also anticipate is that we've heard from Powell speaking earlier in the, last week, talking about tapering or non-tapering and what's likely to happen. That still has a stronger impact than a non-farm payroll number. We're likely to see non-farm payroll in this case as a little bit of a shorter term or have a shorter to medium term impact compared to what the policies are coming from the FOMC.